Good morning, everyone. Yeah, very unfortunate that I got stopped out on MSTR yesterday. But I mean, yesterday did not giving us a really good risk reward entry with a tight stop, and yeah, so sometimes you just can't get a decent entry into one good opportunities. Sometimes you just can't. And right now, the semi sector, yeah, the queues and especially the semis is gapping down pre-market, so quite a lot. Like the whole sector is gapping down by 4%. That is not common. So I believe I'm gonna take some off near the open, and I don't know. Let's see how the SPY and IWM shows us. And yesterday you definitely can see some strength on some software names. Like Shopify is going up, breaking out. Like yesterday's candle is really, really bullish. But actually, a lot of the semis names is getting a little bit oversold. A lot of them are gapping down into the weekly 21. Some even reached the weekly 50. So I think it's good to peel some off, like cover some. I think it's definitely short-term extended. You can see 60-minute chart pretty extended in the lower time frame. But it doesn't mean that they cannot go further lower, but it's just a more yeah, I mean the further the lower they got, the higher chance that we could get a bounce in a in the short run, and it could be a pretty strong bounce. Like if they manage to bounce into the declining line, that's also that would be a pretty strong bounce. And so I think it's okay to take some more, maybe, but it doesn't mean that they can't go further lower. Like, I mean, the faster they go up, the faster they can go down to like take it. Coin getting earnings 2 days later. I covered light. Yeah, things looks pretty bad. Like Dow is coming down from the anchor VWAP off the all-time highs, and AMD continues lower. Like you see, it's slicing through the support, and If you short it yesterday, it will be like a 12 or 13 risk reward trade already. Actually, it's a pretty decent trade, and I mean, I think one of the advantage of shorts of doing shorts that is you can really catch the the quick gains, maybe a decent gain in a short period of time, like a 12 risk reward trade in 12 hour in 2 days is really good. I'm hmm. So we're getting accelerating. We are accelerating into the downside. Um, yeah, definitely. I think. I mean, I don't know why. Wow, Palantir is gapping down and now it's following to the downside. Down 8%. What? That wow. Holy, that would be pretty crazy. Didn't expect it to drop that much. Yeah, so it that's pretty heavy selling pressure, even on Spy and on Russell too. If they, I mean, they can definitely do some undercuts and reclaims like near the 50 EMA. But if they continues follow to the downside, to really break down from this range, then I'll be pretty concerned. Then yeah, maybe may even shift my focus um in the medium term, like how we treat the potential bounce. Like if the work if we get the worsening breath and like if the software starting to follow the market and sell down, then yeah, really not a good thing for the market. They're probably gonna like focus on the shorts when we got it bounce in the coming days or weeks. It's just yeah, things are not looking positive, unfortunately. I just covered my SK Hynix. Covered for Wolf. I covered my SNDK. My MU is heading into the previous swing low and also the unfilled gap back in May. I'm covering my MU. of my socks, so I think I'll leave ONDS and MSTR here. Uh, how to decide to close the short since they reached at a support level? Um, it could be one of the reason, but I think I'm not good at selling too, like exiting the position too. So I don't have any special tips on that. Just just especially for the short, I think just cover some, or just cover all of them when you feel a little bit excited, or like SNDK falls below the 1100 marks. So I just kind of like it. I like the numbers 1100. Then I just that's why I covered it into the level. Sometimes you don't need a really solid reason to cover a short into weakness, and it's always good to cover it to cover the shorts. And there will always a bounce. Like from my experience, generally there will always another opportunity in the short side, and the entry price of your next short is generally will be higher. Like for example, if Wolf is setting up for the next pullback short again, it's probably gonna be above your the point that I'm selling today. I'm covering today. So just just sell some, just cover some and lock in the profits. And the more the indices and the sector um, being extended to the downside, the more you would like to cover. Like I mean, the more you won't be wrong. You won't be wrong because if the market somehow snaps it back, I have a really like when it's um going down really fast, when it's far away from the declining EMAs. Like the bounce would be pretty strong. Like sometimes would be pretty strong, and maybe yeah, true. It's a bounce. Like they could follow lower. They could follow further lower, but generally you got shaken out, and yeah. And maybe I should even close my OND shot. Um, now I'm gonna leave it there. Like if MSTR is gonna stop me out today, I think still the cryptos is looking really weak. And if there's any bounce, especially on Bitcoin, any bounce into the declining 21 or the 9, or even into the maybe the declining 50, I would consider a short opportunity. And at least for now, I don't know. Like, yeah, I think I would short it. If there's any bounce, I think I'm just gonna take some day offs. In the coming days, I don't think I'm gonna make any trades. Maybe if we are getting another gap down tomorrow, maybe we'll play some mean reversions. But I don't know. It depends. And if it accelerates to the downside today, are you going to flip long for mean reversal play? I don't know. Maybe, maybe, but it really depends how fast it goes. It goes down, and how much it goes down. I would say I think a one. Yeah, I want the semis maybe down maybe like 7-8% or more. Like Qs are down 3% or more. But it's I prefer another gap down tomorrow. I think today may it's a little bit too early. Even if I have to really have to um buy the dip because I don't need to. And you don't have to catch every trend, every trade. And yeah, I think it's I think I'm gonna sit out and just chill. Why you don't draw any trend lines or support resistance area? I try to make my charts as clean as possible, and even though I'm not drawing them, but you can picture them in your head. Like Q's maybe the one of the level key level that or the support resistance area will be around like this three swing lows, 685 level. It's not really that hard. Like it's not really that hard to spot. Like if a level that is really hard to like for you to identify, that then that is not a key level. Like it has to be clear. And trend line as well. Like trend line, I think you can kind of see it by imagination, and I'm just trying to keep it as clean as possible. and I don't like using trend lines that much. So you think GDX has a better short setup than cryptos? Um, I don't know. Maybe I think the crypto is a little bit weaker. Like the weekly is much weaker. Weekly is a really clean downtrend. Gold, I don't know, but I believe like in the recent weeks, recent months, gold and cryptos has a pretty strong correlation. So I think they kind of perform similarly. Well, we continue slower. That is quite crazy. Yeah, so maybe I probably gonna cover the shorts mm, pretty early. I think there's also a chance that the market can get a few days gap down, maybe 1 to 2 days more. It's very possible, especially in a weak market. And after it's such a strong rally, and I mean, um, yeah, I mean, there's not much structure in the left hand side when we are getting the lockout rally. So it makes sense when there's not much buyers where when there's a pullback, when there's a dip, when there's the down downfall. Um, like right now we kind of in the no man's land. The next like a structural support will be the prior swing highs, which is pretty far away from here. 5% down. But looking back, I really think um the sentiment is not really that bullish, that euphoric up here. Like I think there's still a lot of people being bearish up here. Like I don't see like a huge surge in the bullishness in the market. Definitely, there are lots of sayings, lots of opinions about like the bullish opinions about the AI, like how AI is gonna change the world and how this would not be the top of this run. Like this is not even the start of the bubble, but still, I think generally it's not really that bullish. You disagree? Okay, I yeah maybe I'm not um I haven't I haven't served the X the Twitter enough or the Reddit or anything. Kind of filter out all the noises out there. So PE bros, bottleneck bros. Okay. Need to be flushed out. Yeah, definitely. I've heard a lot of opinions on that, like the PE and the bottleneck too. Why do you seem to look the most at Qs over for example SPY? Mm, first reason is I most of most of the stock that I trade is are the tech stocks. And the second thing is like I'm short biased. I'm doing the shorts, and the Qs is the weakest one. So if I'm trying to cover my shorts, I would probably um pick a timing where um when the Qs is very extended into the downside. Yeah, I feel like I'm feeling like should I cover the ONBS on this extension? I really like this weekly chart. I really want to hold this one for a longer move. Um, really hard. May I ask, whenever you go through historical price actions, what are you observing and what do you aim to gain from going over them, and how is it helpful to your current trading style? Yeah, sometimes I'm also um, asked this type of similar question to myself, like if I can if I can like teach uh my friend, or like maybe like maybe my son to trade, like how would I how would I teach them? And it's not easy, I think, like because like everyone has their own personality, like has their own risk appetite, and there's so many different strategies, different styles, different um, approach uh, to trading. And I think my answer is I look for the um, asymmetric risk reward entries, and I probably heard it from Traderline interview this year. I forget about which one it is. I think it's Jason. Just give me a second. Yeah, I think it's Jason Shapiro. Um, he's sharing in the day two um of the Traderline conference. Yeah, I think he talked about the asymmetric risk reward, and I really loves it. I totally agree with that, and I I think what I'm focusing on is picking the spot, the entries that can provide you with the asymmetric risk reward. So I think need to achieve one that is a limited downside. So it can represented by a can be represented by a tight stop. So you, the lower the risk, the better, because I'm aiming for the asymmetric um, risk reward and the upside, which is like after your entry, the price um should start trending in your direction. So I don't want the price to keep going sideways after my entries, or even like stop me out. Like after my entries, it keeps chopping around. Then I think it's not the really that great. The entry is not really that optimal, because like the upside is also limited in this case. So I want to. So generally, I would focus on where the trend changes. So like how how I can um where is the best entry after on this uptrend, like on IWM, and I will try to zoom in and look at like potentially where I can really define my stop tightly. And then what are the clues? Like, what are the clues that may suggest the market would start a trend um, in the near future? So in the short run, and yeah, and that's my approach. Like I am looking for the asymmetric risk reward, like tight stop, low win rate, high RR. Uh, but if you're not or like if it doesn't suit you, like you can definitely find your own style, find your own edge, and then continues um digging deep into it. Just focus on what suits you the best and what you're good at. Like if you if you think you're good at shorts, like there's another trader that that presents in the Trader Line conference. Um, yeah, Theo Gattaca. I think he is a short only trader. He only trades the parabolic shorts, and he turned like 5K into 50 million only trading shorts. And he talked about, because he found that like the best winning trades, that the best trade that he has made back then was the shorts, and then he just keep focusing on the shorts, like because shorts are the ones that he's doing well, that that really synchronize with him, and he just focusing on the shorts and avoid the longs completely, and it works. So I mean, you have to find your own style and just um, try your best to hone your skills within that particular style, that particular entry, that particular setup. So yeah, really recommend to go through the Traderline conference this year. Um, I think they're really great, and I learned a lot. How do you determine what's going to make it to your short list, especially when there are conflicting stocks in the same category showing the same behavior? I don't quite get your question, but if there are some stocks in the same sector, let's say let it software stocks. Some of them are looking great, like before today maybe. Like Shopify actually looking pretty good. SE is also looking pretty good, and I believe Fake is also looking fine, although it's like a weekly downtrend. But yeah, like Dash is also looking fine, and some of them may be looking pretty bad. I know like Twilio starting to go down, Reddit getting rejected. So in this case, maybe then um, definitely from the market, because the market now is weak. So I will focus more on the short side. But if I can choose, I won't like focus a lot on the software sector. Like maybe I would try one or two, but I mean, like in the semi is a much weaker sector right now, and I think 90% or even 95% of the stocks are staying below the 50 EMA, and most of them are bearish. They are aligning with each other. They are the moves are pretty identical actually. Like bounce into the declining nine. A lot of them during the previous bounce. So yeah. Last Thursday when you tried all those entries in SNDK and stocks though, what was your risk size? Most of them are like 0.3%. I think some of them are less than 0.3%. But that's my size, but you don't need to like strictly follow me. It really depends like how it really depends. And if you get a higher win rate, then you don't need to you can size up a little bit. If you get a wider stop, you can size up a little bit. And yeah, but generally I actually recommend to use a small risk per trade, especially when you're new, when you're trying to gain from the losses, like learn the lesson from the losses, like build your experience from the number of trades that you take. Then like risking small can really reduce your drawdown. Want to ask, mental adjustment, I have a year-to-date 15% drawdown and peak to trough 27%. How should I refresh myself and get back on track? Your stop is 0.5% per trade and already, but keeps stopping loss, like keeps getting stop losses. Uh, I mean in 2024 in the summer, I've also got a like 30% drawdown in around 3 months, and I'm also using like 0.5% per trade. And from my experience, I've made a lot of many mistakes, like over trades, like making the trades that should avoid. Like I sometimes some of the trades I really, when I look back, I really don't know what I'm doing. Like poor entries. I even ignore my stop a few times, or maybe sizing up too much. So I made so many mistakes back then, and yeah, and then I recovered from the trough, from the rapid hold. Is it word? From the hole. So take a rest, and when you feel okay, um, go back, like look back and really um writing down your trades, journaling your trades, and see what what you can improve, like what problems, what mistakes had you made in the past few months, like during the drawdown, and how you can potentially like really trying to recall, like really trying to recall the memories. Why, like, are there any factors leading you um to making those mistakes? Like, what are you thinking about? Like, maybe are there anything outside of trading are influencing you? Like anything like that, that can help you to notice, to stay alert when the same thing is happening again. I mean, let's say you had an argument with your girlfriend, maybe on that night, and then the next day you trade really badly. So this is a lesson. This is a takeaway. Like next, either you avoid trading, you just make less trades, risk less when you're not in the best condition, not in the best physical mood, or your mind clarity, or you just like train yourself into like to stay really focused. And but I think it's really hard. I think you need to just adjust. So really yeah, study your past trades and improve from your own mistakes. And maybe at the same time also take a look on your good trades as well, like um what had contributed that into a good trade, like maybe the are you buying a breakout, or are you trading the EP, like maybe something like that, or the timing, anything like that that potentially make that a good trade. And also you can take a look on those big winning trades as well. Like it also helps you to regain your confidence back. I mean, let's say I think if I think I bought Dell on this candle, the 10th of March, and I think I sold it pretty early, mm, probably around here. So what makes this Dell trade um profitable or like a really good getting good risk reward? I think it should be more than 15 R, I think. Maybe even more, maybe 20 something. And so if you look back, this is Dow is showing relative strength during the market weakness, and I use the close. I use the 21 EMA to trail the move higher, and it actually worked pretty well. Like if I because the market is like getting a little bit volatile back here. So if you use the 9 EMA, you will probably got stopped out because like the market weakness, and and yeah, I decided to use the 21. So this is also a good thing to notice to use, and also I follow the rules as well. I think yeah, I could have got shaken out if I'm trading 2 years ago. And yeah, be patient. I think yeah, you can definitely summarize the some of the good things that you have done, and yeah, you have to tell your mind that these are the good habits that you should keep and continue doing it. Are there any books you recommend that truly changed how you approach trading? I think if I had to pick one, I would choose How I Made $2 Million in the Stock Market by Davis. I think that my favorite trading book. Yeah, that's my favorite trading book. And it looks like I'm gonna get stopped out on MSTR. So I think I'm gonna close my short on ONDS as well. And I believe the Market Wizards series is also a really good series of books. It especially it covers a wide range of traders with different time frames, um, different strategies, different um, takers that they trade. But some of them are trading futures, some of them are trading commodities, like some of them are trading stocks, and like some are only like short sellers, some are the position trader. So you really um you will really understand that in trading there's really plenty of ways, multiples of styles, and again you have to find your own your own style, which um suits you the best. And maybe at the very beginning you can try to copy other traders, but it is not sustainable. Like over time, I think you have to tweak, you have to optimize, you have to modify the rules, or modify the system, and to make it yours, instead of blindly following what others doing. Read O'Neill, How to Make Money in Stocks? Yes. But I'm not a fundamental guy, so it so it so it's not really that standing out. And I prefer reading um the storytelling telling type of books. So the Market Wizards and How I Make 2 million 2 million in stock market. Like those type of storytelling books, I I enjoy reading them more. Yeah, Reminiscences is also one of my favorite books. I like it a lot, although it's a little bit too long, but uh, but I still enjoy it. And it's also really interesting to see how the market is operating in maybe 100 years ago. I think there are a lot of similarities between now and then. Any technical analysis book that you find helpful? Not really. Yeah, but maybe Mark Minervini's yeah, Mark Minervini's book. The thing is the Trade Like a Stock Market Wizard, like the first book probably, but actually not really that technical. Like I think I really love the part, especially the part of risk management. I really like that. Maybe also Stan Weinstein's like the secrets for profiting in a bull and bears market too. Yeah, it's a little bit more technical, but definitely not the books talking about like, the best technical patterns or like I don't know. I never read those books. You show your sector stocks. Yeah, you can you can take a look. MSTR is rallying into the declining EMAs again. Hi Martin, do you look for Colomachi's type tight consolidation after big up move now? Yes, why not? But it just occurs really rarely now. Like during this whole move up, SNDK, this 11-month rally up for like 5,000%. Wow. I haven't checked that figure. It's like 5,000%. Yeah, I think and maybe this one will be the first like a tight range breakout, and this is definitely the second one. And up here, I don't think so. And I mean, as long as the tight consolidation breakout can provide me the asymmetric risk reward, like I think this is the prerequisite, the fundamental uh line beneath the this setup, this entry type. So if that hasn't changed, then I will keep trading them. But they're just not happening that frequently now. Like you're gonna miss the whole move if you're only focusing on the tight range breakouts. You use a follow through day or any indicator to catch the bottom of a bull market, a bear market, or you just watch a list of stocks to sense the market condition. I prefer the latter. Pretty strong reversal, pretty strong actions on net. Oh, really nice. Really like it. All the cybersecurity names pulls back into the non-EMA weekly. And finding support. So where does the net find support again? Unfilled gap. And weekly non-EMA. Maybe the previous highs too, like this, the weekly highs. Also like, but it also, I also consider this as I think the gap level is the same, and also maybe the 50 EMA. Looks really good. I think I'm gonna lower my stop of ONDS into this gap, the high of this gap, today's gap down. So it's easier to manage uh, this position in this way. I remember the last stream you said you rather short stocks that are in a clear downtrend than in sideways. Just wondering why do you short MSTR since it is in sideways motion? This is MSTR. This is the daily. 9 EMA flat, 21 EMA trending lower, 50 EMA trending lower, 150 EMA trending lower, 9 below 21, below 50, below 150. I don't think that is a sideways action. Weekly. I don't think I need to explain this one. And yesterday we're talking about what's that stock? Path. Path. 9 EMA rising, 21 EMA flat, 50 EMA flat, 9 above 21 below above 50, 50 below 150. And you can see from the weekly too, like it is going sideways for 2 years almost. Like I'm chopping around in this range. Martin, why trade Rivian if avoid choppy a few days ago? Rivian mostly is because of the relative strength during this pullback. Staying up above all the EMAs. But I agree, it is a really choppy stock. It's going sideways for also for 2 years. Having said that, maybe I kind of like it. Keeps with higher lows all the way up, and back then it's above all the EMAs in the daily. Weekly EMAs looks like maybe it's setting up still below the 150 EMA, but so I think that is a good risk reward trade. So that could be a so. It is what it is. And actually, like after getting stopped out on Rivian, then I kind of really start focusing on the shorts. Like these are Rivian and Hood are the long trades that I've took, but they both got stopped out, together with all the um, weakness in the cybersecurity stocks as well. So actually, they helped us. They helped me to focus on the short side, and yeah, sometimes taking losses is not really a bad thing. It's not really that bad, and I think this year one of the I don't know, maybe I think one of the good thing that I've improved that is I really listen to the trade feedbacks. And I become kind of sensitive to whether my trades are doing good or not. Are they getting stopped out? And after they're getting stopped out, how are they doing? Like if let's say if Rivian after it gets stopped out and the next day it gap up, like it opens above all the EMAs, then I would consider the market may not be that bad, and I may consider to re-enter it. But we got a gap down below to the 9 and 21. break down from the previous lows as well. So it's also um, um, yeah, the area that I would look at would analyze. It's not only about getting stopped out or not, but also look at the actions after you got stopped out. But actually, I think this trade on Hood should be avoided. Like compared to Rivian, like this one Hood is actually bouncing into the declining line, and in the 60-minute chart, it's still below the 50 EMA, and it's surely there's a chance that it could find support and continues higher, but and it's also below the previous highs as well. Yeah, I think this one is a bad trade. I think Rivian one would be a fair one. Like I don't consider it as a bad trade, but Hood, this one is a bad trade. Actually, looking back, it's actually a short entry instead of a long. And yeah, I think this how would this how I would categorize them. And we try to do better next time. We got a huge bounce in the cybersecurity names, and also the market is bouncing as well. The Misty are gonna stop me out at it very soon. So I'm gonna close my WNDS as well. I think I'm not gonna wait, and if it goes down, I'll let it do this. Cybersecurity longs. I think a little bit too late to me. So yeah, hopefully maybe later this week. The crypto, maybe. Is it possible that should be a long flip? The BMNR is looking pretty good. IWM is holding up pretty well today, recovering all the losses, all the moves to the downside intraday. And yeah, maybe like crypto stocks are looking pretty good. Not gonna lie. Maybe tomorrow, but there's earnings in the coming days. Maybe BMNR, maybe cybersecurities. But I don't know. Basics all, yeah, bullish reversal. Yeah, I think the software names are actually looking pretty good as a whole. Although there are some weak names, Spotify is breaking out. And together with the cybersecurity strength, also some of the like Unity, um, what are the other names? Shopify. Shopify is also one of the strong names right now. Reddit 2 days later we have got the earnings. Zoom actually turned around in the rising 9 and 21. Interesting. I think software looks really interesting. Yep. Yeah, definitely they're looking really good, but I'm too late, so no FOMO. I'm not gonna trade them right now, and I believe gonna wait. Hopefully they're not going to gap up for like 10% tomorrow, and I believe we will get a good opportunity for entering the longs if the market shows some strength, shows some sign of improvement, and I don't think it is yeah, I don't think it's really a best time to be very aggressive in the long side, given the fact that we get a lot of stocks, especially in the semi sector, falling down deep in the water. I am interested how you get the situational awareness to short or long. If we get a rally up, then we will run into the declining EMAs. How to determine to short semi or go long cybersecurity? Maybe I will do both. And yeah, maybe I would do both and try it out. And let's see which side I would gain traction on. And after maybe for long side, like if I'm playing the software long, maybe I would wait for the like I Russell gap up and then pulls back into the 9 or 21 EMA for the pullback longs. And like at the same time, I believe the Q should be like still quite stretched from the declining 9 EMA. So maybe yeah, just tried it out, and like if we got some follow throughs on the software on the long side, then maybe I will be a little bit cautious on the short side, or just um or just do both. Like why not? Yeah, so I think we're entering a pretty interesting spot today. We got a bounce. We got a pretty strong bounce right here. So yeah, I am. Yeah, I don't think we need to be. I don't know. Yeah, be open minded. I think either side we can have follow through. Spy is strong, IWM is strong, Qs are weak, and maybe we are entering a chop. We could, or like the weak uptrend that we got in back in 1999. Like, don't forget about this type of weak uptrend, like a really hot penny market. Maybe I don't know. I don't know how the individual stocks were doing back then during this period, but definitely the Nasdaq is building higher lows going up, but it's going up just slightly. For how long? For 10 months. So really be open-minded, and I really don't know. No one knows, actually. No one knows. So I think this is the end of today's stream. I think this is a good it's good to end here. Yeah, I think today is a pretty solid demonstration of how I close my shorts and covered it into weakness. Looks like I'm doing pretty. I got lucky and doing pretty good. Yeah, remember, I think I truly believe it's always good to to cover some into weakness, especially for the short side, like selling into strength, cover it into weakness. And if the market really bounces back and then like gets another leg lower, you would definitely get another entry. And this type of bounce could be huge, like as I've just said. This type of bounce could be fast and strong. Maybe next day gonna step back into the declining line, and it would be a pretty strong bounce, and it could gives back a lot of your profits. And I hate that. I hate that. Thank you guys for coming, and we'll see you in the next one.